New client additions and orders in the mobile segment, which is 57% of sales, helped drive Dixon's Q2 profits by over 45%. The other segments, on expected lines and as per guidance, have shown a bit of a moderation. Saurabh Gupta Johnson to put the quarter or the half year into perspective and what happens in the times to come. Saurabh, great having you. Thanks for taking the time out. And happy with the quarterly performance, or would you have hope for more?
So overall, happy with the quarterly performance. I think so. We have achieved what we had budgeted for. However, certain verticals like lighting and all, it was a slightly disappointment in terms of revenues. We need to do a better job there, and I would say even consumer electronics could have been slightly better.
Okay, but I thought, I mean, the last time that we spoke, which was non-results, you had spoken about the possibilities of lighting division slowdown coming in, and so I thought in part it was expected. By here you say that you could have done a better job. So what do you mean by that?
I mean to say, yeah. So clearly, I thought that the markets will recover. It is clearly a case where it has been almost 8-9 months where the markets have been quite sluggish, and which is reflected in other companies' results as well. And clearly, there's a big price erosion which has happened in LED bulb portfolio, which is a significant part of our portfolio. So we have launched some new product categories. Hopefully, that should have a positive impact in the next upcoming months. But yeah, lighting we need to really come back to our historical levels. Of course, the markets need an improvement on that side.
So here's the question, therefore. I'll come to mobile, Saurabh, because that was the big shining point. But just a question here on lighting or on LED. Would consumer demand be the driving force here? Or do you think that even if that remains maybe sluggish or marginally higher, you still have the ability or the right to increase the performance of these other divisions?
So one, the market needs to improve. Secondly, the LED bulbs where a larger dependency is there and a significant portfolio is there. There we are seeing a degrowth in the market. Maybe the replacements or cycle is slightly longer than the historical bulbs there. But yeah, clearly we're expanding capacities, increasing our market share in battens and downlighters. And we're also getting into new product categories like strip lighting, smart lighting solution, and professional lighting. And we've got some export orders. So clearly, my sense is every quarter it should keep getting better from here. But yeah, we need this market to improve also. So surprisingly, a small category product is not selling in the market, and the high-end products are seeing a good sales. So this is a kind of a phenomena that we are seeing across categories.
Across categories, indeed. Now, the mobile segment, very strong performance. You must be happy with that. What's the reason? Because I also see in brokerage notes that not only are larger orders coming in, but new client additions have helped. And is there something to look forward to in terms of client additions or logo additions in Q3?
Yeah, so this clearly is the largest piece for us and will be the largest driver for us, both on the revenue and profitability side. One, we have been able to take higher share of wallet from our existing customers like Motorola. They have been shifting higher volumes to us both for domestic market as well as for exports. And also we have acquired large brands in the last few months, which is Xiaomi, itel. We have entered into a large partnership with Nokia, and now we are looking for exports for Nokia as well. And we are also in discussion with some large global brands, and hopefully we should be able to conclude it by Q4. And the production or the manufacturing should start by next financial year. So clearly, mobile piece as a whole, the opportunity size is larger than as compared to other verticals, and we are well positioned because we've really acquired a lot of customers in this category.
Yeah, well, so a note says that the order book for Nokia has increased and the production has ramped up to 1 million pieces per month now. Now, again, on expected lines, is this part one? And part two, what is the game plan for the next 6 months in terms of either orders from certain clients or in terms of the production facility or the production ramp up that we're talking about? 1 million pieces a month right now. Does it stay this way or does it ramp up even more?
Yeah, so broadly 1 million feature phones for Nokia, 1 million feature phones for Transition Group. Jio, again, Bharat 4G phone, we have a very strong order book there. So clearly those are pretty much, I would say, out of that, itel and Nokia are pretty much ramped up. We'll continue to deliver decent volumes, hopefully some export volumes from Nokia. Jio Bharat phone needs to ramp up more. The order book is more, so we need to execute well, ramp up more. And then from here onwards, I think so the biggest client is Xiaomi. So where the production has already started, but yeah, initially next 2 months it will be in a ramp up stabilization kind of a phase, and by January Q4 of this financial year we should go to a decent volumes, and then the volume should keep picking up. And by Q4, hopefully, we should be able to conclude with another couple of large brands, and their execution should start by next financial year.
So this 5 to 6 million monthly capacity of feature phones, if I'm not wrong, and 2.5 million of smartphones, is this now getting ramped up meaningfully in the next 6 months, or would it happen largely in FY25?
So it will get ramped up in the next 2 to 3 months, and then we'll go for another round of expansion by Q4. So clearly, we will have almost, if you look at the total Indian market size, around 230 million, and broadly we'll be creating a capacity of almost 85 million out of that. So almost one third of India's capacity will be done by Dixon in the next few months.
Wow. So talk to us about CapEx, Saurabh, here, because are you doing all of this? Plus, if I'm not wrong, you've applied for the IT hardware PLI, where most people say because it's a 6-year PLI or thereabouts, the CapEx might be slightly larger as well. What is the CapEx requirement? Getting funded easily by internal accruals and cash flows? Talk to us a bit about that.
Yeah, so we have applied into the hybrid category, and hopefully the government approval should come out in the next few weeks. So the hybrid category, we have committed an investment of almost 250 crores. We have committed a revenue of almost 48,000 crores for a period of 6 years cumulatively, and starting next financial year. So the capex will also happen over a period of 6 years, both on the final assembly, and then as part of the PLI scheme, you need to invest more and more in backward integration and localization. So we are looking at power supply, we're looking at display module. This year we'll start with PCBA. And clearly we have one customer, Acer, on board, and we are in the final stages to get a large global customer on board. So clearly, it should happen, and we feel confident that it can completely, the capex can be done from the internal accruals.
Got it. Sort of almost every major consumer category, and I mean, let's say smaller categories, but paints or food, etc., is starting to show some softness in volumes. Even Colgate had that softness in volumes. I heard you say that the higher categories are doing well, but the smaller categories are not. I mean, just a basic question to you guys, because you guys are such behemoths when it comes to electronics, which is now almost consumed as much as food. How do you see this slowdown impacting the market at large? And there might be the impact coming on to players like you as well. Could it be materially impactful over the course of the next 6 months? What are the signs on the street?
Yeah, so there has been a mixed response here. So markets were slow, but then you had good sales on the Big Billion Day, on the Rakhi festival, Onam festival and all. And recently on the Dussehra festival, I would say. Now the real test for us is how the final sale, because Diwali is just around the corner. So how the final consumer sale happens in the next 2 weeks. Our order book with the principal customers is fine, but ultimately it all boils down to how the final consumer sale happens, and whether the distributors or the distributors are stuck up with inventory, or whether it gets liquidated fast. So that's the thing that we are closely watching on. But to your overall point, Neeraj, I would say demand is not that great, and that we are seeing in the lighting category. In our TV category also, we are seeing that there has been some kind of a softness in demand. So in our case, we have grown majorly on account of either taking higher share of wallet from customers or adding more customers in the category. And then the margin expansion is happening mainly because of more focus on our own design solutions and also backward integration.
Got it. Saurabh, any risks to estimates of, well, what's the last one? Okay, 16,500 odd crores for FY24. That's what people estimate by and large. Maybe FY25, 20,000 odd crores. Maybe that's a bit far off in this fast changing world, but half year done, you reckon 16 odd thousand crores possibility?
So Neeraj, I would refrain from giving any number, but clearly I would say we have done well in the first 6 months, what we had budgeted for, and things are looking promising in the next 6 months, mainly on account of the mobile vertical. So I would say, yeah, we'll definitely work towards achieving our budgeted numbers for this year. And my sense is Q4 should be a better quarter. Q3, immediately after Diwali, there's always a kind of a slowdown that we see every year. But Q4, because by the time some large customers will be ramped up in mobile category. And also, hopefully, the other verticals should also start performing by Q4.
Got it. My final question, Saurabh, maybe I should talk to you about this at the end of the year, but I'm tempted to ask this. We'll repeat this again at the end of the year. But your space from a listed market perspective is now well and truly developed, because there are 9 listed players currently, maybe 6 others coming. So it's a very large sector that has gotten formed. And a lot of people say that maybe EMS is where IT was in 2000, and there is not just next few years, but maybe decadal or 2 decadal period of growth ahead of us. Do you guys at Dixon, because you're the largest out there, look that far out? Do you believe that that's the kind of runway of growth that exists?
Yeah, we also have the same conviction. So if you read the CLSA report, they have clearly mentioned that India's share in global electronic manufacturing space is just 2%. China is at 45%. And they are saying by 2030, that number will go to higher single digit. And then by 2040, the number can go to potentially 20%. And if India has to become a manufacturing hub, not only for serving the large domestic market, but also a global market, you need 7, 8, 10 companies similar to what you have in IT sector to take India to a global level. So clearly we have the same conviction. And that is the whole reason, Neeraj, that we are significantly expanding our investments, putting up more capacities, gearing up our organization, investing in more systems and processes. So clearly we think we are sitting on a very large opportunity. And next 10 years is India's decade, is electronic manufacturing decade, is our decade, I would say.
Yeah, that's a great place to be in then, Saurabh. Thanks so much for taking the time out and giving us a lowdown, as always, Saurabh, and wishing you and Team Dixon a very happy festive season.
Yeah, you too. Happy Diwali to you and everybody in with you. Thank you.
Thank you so much. And viewers, thanks for tuning into this conversation.